Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a strategy roundtable where we talk about current market conditions, the view on the market, short-term, long-term, trading psychology, how to take advantage of your current Tradespoon or Yellow Tunnel subscriptions, and any questions you might have in general. For those of you who are new, welcome. If this is your first live event, do me a favor, just type in first. Always want to welcome new subscribers. Good morning, Buck. Good morning, TJ. This is my brief bio. I was Executive Vice President and Head of Technology at Options Express. Options Express was an online broker-dealer acquired by Charles Schwab. Since I left Options Express, I work as a consultant and investor in several financial technology firms here in Chicago. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, trading and managing my own money. I've been doing that for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in technology and science. Disclosures trading stock and options involves risk and not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. Excuse me, I'm not a financial advisor. I'm not registered as FINRA or CC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance. And you can see the relationship between Tradespoon and Trading Block on the bottom of your screen. No audio. Let me know if you guys can hear me. I assume you can. Please try to connect via phone line. All right, loud, clear. Some people say choppy. Okay, it's weird. All right. All right, so let's talk about trading system. Better audio video is perfect. Okay, I will assume you guys can hear me. So let's talk about first trading system. Before we get in trading system, let's talk about current market conditions. I assume that's what everybody wants to talk about. So mega cap stocks, technology stock have been, kind of since the March one-way street move. This is the first time I think we have 2 days, 2 days of down market. And we haven't had a 3 days down market on very large volume, right above average volume. So, we've been talking about of correction, short-term correction, end of August, came, first week of September. I think for the next couple of weeks, market is going to continue to trade in a sideways range, right? QQQ is approaching 50-day moving average. I think this is a pretty strong support. And market will hold this line, potentially can overshoot, right? I mean, I think when everyone comes back from the long weekend next week, market usually is volatile in September, beginning of October. So it potentially can overshoot, maybe, maybe to 260 side, but to 260. But current, I would assume 269, 50-day moving average will hold, right? That's strong support. This is more of a technical trader. There's really nothing. There are no new news that came out. This is just market reached overbought level and needs some kind of a consolidation. So QQQ is leading the market into the downside. Same thing with XLK. You can see Amazon's, Apple, leading the market to the downside. And usually 50-day moving average, I think, will hold, potentially can overshoot, but it will stay. Spiders are pushing the actually 336 level as we speak. Strong support is at 340. So I would keep an eye on the market and see if the 340 level can hold. Right now, we're trading right below this level. That's the breakout, 338, 330, 337, 338. So I would look, see where we close today. If we close significantly lower, if we close today as we go into the weekend, long weekend, I think people would want to take some profits go into the long weekend. Then again, approaching 50-day moving average, 330 would be the support. And I assume, until otherwise, market will hold the 330 level. If we trade below 340 level today and on Tuesday after the long weekend, then I think this would be a new overhead resistance. Right now, 360 is a new overhead resistance. I think the stop is going to stay here. This is the new top in the market, probably will stay here going into elections. Potentially will get retested end of September, right? So next couple of weeks, I think it's going to be volatile. Market will trade either at 50-day moving average. I think the worst case scenario would be 320, but 50-day moving average, I think, will hold. And the market will probably trade between 328, 360, going till going into end of September. In terms of why not, going into correction? There's still sectors that are outperforming the stock market. I saw JP Morgan. Right? JP Morgan is actually positive, right? So financial stocks. Let's see how's XLF doing in general. Right, XLF continues to outperform the market. Transportation sector continues to outperform the market. Last time I checked, Delta Airline slightly negative, positive. So I think the theme of rotation of growth stocks, PayPal, MasterCard, Apple's, Amazons of the world, money will flow back into value stocks. Delta Airline, Disney of the world. Let's see, Schlumberger is actually turning positive. So you can see selective rotation into the value stocks. And I think that theme will continue, right? The value stocks, just like yesterday, value stocks in general, if you look at the Vanguard, down 40 basis points, but work from home stocks, technology continues strong movement to the downside. So I think that rotation will stay. I would assume next couple of weeks would be volatile. Looks like Spiders is unable to hold on to the 340 level, the overhead resistance. So next logical level of support is 50-day moving average. And I think that level will hold, potentially worst case scenario overshooting to 320. In terms of hedges, I think now that we broke through the 340, we'll see where we close. But I think I do have a hedge. So in terms of how to hedge the portfolio, if you go to Elite Circle, my main hedge was Spiders. I mean, I do have Condors. So the way to hedge the portfolio, not today, but let's see. So currently I did sell 370, 380 January call spread. It's hard to time the market correction that we're seeing today, but I did sell 370, 380 call spread, right? So sold it for $3.49. It's probably trading around $2 now as the market sell off. And now that the market did break through the 340 level, I would look at the support and resistance levels, but potentially now that the 340 is this overhead resistance, you can sell 340, 350 or 350, 360 call spread, right? 350, 360 call spread is here to stay. You can sell 350, 360, either October or November for the elections. In my case, I did it for January. But selling out of the money call spreads, I think, is a good way to hedge the portfolio. from this recent volatility? So Kevin, thank you for the question. Carmen, triple QQQ going up. I think it's the short triple short ETFs are going up. Don, where do I find how the sectors are trading? In terms of sector, the predictions or how they're currently trading. If you want to know how they're currently trading, I'm looking at the, I'm using ETFs, right? So I can see Nasdaq is down another 5%, right? Kind of a sharp, steep sell-off. Home builders are down 3.5%, but approaching 50-day moving average. So I'm going to start looking at these key support levels, right? So home builders approaching the 50-day moving average. Very important to see if that level will hold, because the value stocks, 80% of the technology of SPY is not technology, right? 20% technology and 80% is, financial, industrials, energy, etc., etc. So that should provide support for the spider. So I would look at these key support levels, and if they do break, then potentially I would, have to reassess. Metals and miners 2%. Germany is down 2%, but staying at the 50, approaching the 50-day moving average. Emerging market is already at 50-day moving average. China, pierced through slightly below 50-day moving average. Industrials are staying at this June 8th high, so that's important. 76 level is important support. So I would look at the support levels for these major asset classes and see if they're actually able to hold on. Energy is outperforming, XLE is flat. I would look at the dollar, right? Strong dollar. That short term is bearish for the market, right? We went from 91.77 to 93.17. I think overhead resistance is 94. So dollar is stronger dollar is bearish for the market. And I would look at the treasury, right? Treasuries are actually down today, right? That's also bullish for the market. We had a strong rebound from oversold conditions, but still, as long as the dollar continues to be weak, and as long as the treasury continues to make lower lows and lower highs, not going back to 172, I think this is a short-term correction, right? And at some point, at 50-day moving average, below 50-day moving average, buyers will start stepping in. Yeah, I think, I would still use dollar cost average. I don't know if if the rebound is going to be I think rebound is going to start, by the end of September. So the next 2 weeks, could be volatile, right? So, next 2 weeks, I think market could be volatile and, try to, break 50-day moving average. I doubt it's going to get to the 200-day moving average. Yeah, UPRO, Carmen. Yeah, I don't trade leveraged ETFs. I trade options. But I mean, this is still, directly correlated to SPAR. This is not negative. XBI. So XBI together with technology isn't selling off 5%. It's approaching 200-day moving average. I think it's oversold. Personally, I have a position in XBI. I'm gonna see if this level will hold. But I think short term it's oversold, probably an opportunity to add on to the position. And we see healthcare is actually outperforming, staying at 50-day moving average. Consumer discretionary approaching 50-day moving average. Transportation is outperforming, and banks are still positive. All right. Joe, gold, I would be a buyer of gold on any corrections, right? I think gold is at the key support level, right? 179. I would watch that level, maybe buy gold now and have a clearly defined stop levels, in case the 50-day moving average does not hold. But I would be a buyer. At this point, maybe do dollar cost average, have a clearly defined stop level, but then, if it drops to 170, continue to buy. But it's sitting right at the key support level. And I personally think this support level will hold. All right, so that's my view on the market, and I would look at the dollar, right? Dollar is this key overhead resistance is 94. Potentially overshooting to 95. So as long as the dollar doesn't break this range, 94, 95, I think this is again just a short-term correction, and more of a technical trading. All right, so how do you trade in current market conditions? Very important in a live trading room. I go over 4 important rules, right? Ultimately, investment is based and trading is based on your opinion. I think 50-day moving average will hold. It might overshoot this level. So it's very important to have a clearly defined trading plan that can help you withstand the short-term volatility. So in the live trading room, I talk about 4 main rules. One is the portfolio allocation, cash. So 30% of the portfolio should be in cash for situations like this, right? Market is down. I think it's a short-term trading, low volume, people going into a long weekend, hedging their position, potentially will carry on for the next 2 weeks, kind of this volatile trading. So having cash will help you to either hedge your portfolio or repair your portfolio or allocate more cash and buy into the corrections. So on average, 30% of the portfolio should be in cash. That's the first rule. The second rule is portfolio drawdown. Trade size is extremely important, right? If you overly allocate it, let's say in Apple or in technology names, and the market is in correction, if you don't have the proper trade size or allocation, then this is where you will, usually emotions will overwhelm you, and you would trade based on emotions. And, usually you would sell right into the bottom of the market. So those 2 rules are very important. Portfolio drawdown, the goal is not to lose more than 2.5% of your portfolio per trade. So if an option trade, I allocate 5%, 50% stop loss. And irrelevant of what my opinion on the market is, if I see that my stop loss is reached and the market continues to sell off, then I have to close my position to make sure that only 2.5% of the portfolio is at risk. So again, option trades, if I buy an option for $1, my stop loss is 50%, and that should not exceed 2.5% of my portfolio. And then I look at number of positions I have. If you start new, I would encourage you to do 4 or 5 positions. Then no matter where the market stops, your maximum drawdown is 10 to 12%. I usually have 10 positions. I know my portfolio drawdown is 25%. So the way I mitigate that, I do 2 different things. I either hedge, like I did with Spiders, 370, 380 call spread, or an example of TJX, I have Condor, right? I have a market neutral strategy where I'm long and short stock at the same time. So here I have 57.5 call spread, right? So I sold 57.5, 62.5 call spread, and I'm hedging my portfolio. So then my loss is, instead of 2.5%, maybe it's 1.5% of the portfolio. So collars, condors, cover calls, all of these strategies allows you to reduce your exposure to the market. So those are the most important 2 rules. Irrelevant of what your opinion on the market, if you always have on average 30% of your portfolio in cash and you're always aware of what your maximum exposure to the market and you understand what that is, then you can make decisions and when the market is in correction, right? We always talk about inner market and the outer market. Right now, a lot of the decisions we make when the volatility rises and uncertainty rises, like we have right now, right? VIX is going back higher, right? And a lot of, usually when VIX is rising and above historical average is 20, now we're approaching 40, right? It's 2 times the historical average. Everybody, including myself, we tend to make decisions based on our biases, based on our beliefs, as opposed to empirical data. So it's very important to first be self-aware. So trading psychology is extremely important, right? We talked about Yellow Tunnel. For Yellow Tunnel subscribers, there is a lot of content. So Yellow Tunnel is a sister company of Tradespoon that I created about a year ago, or actually more than a year and a half ago now, where to deal with the uncertainty in the market, right? So we have Dr. Maneker, who often contributes to the blog and videos. So we talked about, understanding your inner market, managing extreme uncertainty. So this is the time where I would go back to Yellow Tunnel and start watching these videos on trading discipline and market plan. And you'll realize that everybody, including myself or all the professional traders, when the uncertainty rises, that's where we tend to look at data less, and we rely more on our, biases and beliefs. And from my perspective, in order to manage that, you have to be self-aware and realize when you trade, are you trading based on the data, or are you trading because you have a fear of double-dip recession or fear of missing out? And the other one, you always have to look at the portfolio drawdown. And so you're aware, whether you're right or wrong, where the market is going to stop selling off, right? Nobody knows exactly where the market is going to stop. Right? We can have an opinion and we can invest based on the opinion, but nobody knows for sure. So it's very important to make sure that you have the proper position size. Position sizing is very important, and your maximum portfolio drawdown becomes the most important rule you can have in your portfolio. So if you just follow these 2 rules, then that I think is going to be half of the, you're going to be halfway there in terms of being a disciplined trader and a long-term investor. The third rule is probability of success versus return on capital. When volatility rises, very sudden, right? This is where the models become, they need to adjust to this new jump in volatility, right? When VIX jumps from 20 to 40 in 2 days, models would have to adjust, including the Tradespoon, right? So the predicted support was 345, overhead resistance is at 357, and market, well, this is probably delayed. What is it, 336 now? It's bouncing back. So the market is at 336, right? The question is the market, is the model wrong? It's not that model is wrong, right? It's obviously made the prediction that the support would be 345, and we were already as low as 335. So the idea that model needs to adjust to this new spikes in volatility and 5% move into the market. So you need to look at the support and resistance carefully, right? From my experience, when the 2 days in a row, when the market makes such a sudden move to the downside, this is usually a reversal of the trend. Right now, the trend is showing positive. On Tuesday, the trend will become negative, but the model needs to adjust to this. And now the 345 is an overhead resistance, right? I think 340 is actually overhead resistance. We'll see where we're going to end up, but definitely if the market reaches 345, what used to be a support is now becoming an overhead resistance, right? And now for the bulls to be in control, market has to close above 345. So right now bears are in control. As long as we're below 345 or 340, now the bears are in control, and for the market dynamics to change, bulls have to trade above this range, 340, 345. So trading based on probability of success long-term again, we have three models: active trader, weekly trader, and monthly trader. Across all three models, the average probability of success is 75%. So 3 out of 4 trades are successful. The 25% of the time when the market model is not successful, it's the times like today and yesterday when volatility spikes and you have kind of a random event where market's going to sell off. Predicting support and resistance levels for the model, it needs at least a couple days to adjust. So from long-term perspective, the third rule is to make sure you always trade based on probability of success, and making sure that you don't risk more than 2.5% of your portfolio per trade, right? If it's a short-term day trading, it should be less than 1%. And learning how to manage position entry and exit, right? The fourth rule, once you determine probability of success across three models that we use in active trader, weekly trader, and monthly trader, it's 75% accurate. Then your return on capital, for day trading, it's less than, between 0.5% and 1%. If you hold in position for a week, maybe between 1% and 2%. And if you hold in position longer, for 1 or 2 months, then anywhere from 5 to 10%. So that's probability of success and return on capital. And then the final rule is to making sure that you properly manage in position entry and exit, right? Position management is important because if the models are correct 75% of the time, the 25% of the time that it's not correct, like today, you need to make sure that if the trade goes against you, you don't lose more than 2.5% of your portfolio per trade. To make sure that the 75% of the time you're correct, that will outweigh the 1% that the model is incorrect. So on that one losing trade, it's very important to follow those stop levels, right? To make sure that long-term positions, you don't lose more than 2.5% of your portfolio. And for day trading, it's less than 1% of the portfolio. So those are the four most important rules of trading. And I think if you just follow them, first two are the most important, these are the second most important rules. You can just follow these four rules. I think it can help you build long-term confidence in yourself as a trader in the system and be able to trade during these volatile times and use them as an opportunity. All right, so we talked about trading plan. The next one is trading journal, right? Trading psychology is very important. It's very, you can spend 10 minutes going over your trading plan, but it takes time to become a more confident, more disciplined trader, and being flexible. So one thing that helps me is the trading journal. So in trading journal, I would write down every time I trade whether I'm following these four rules. What do I see in the market? Unemployment data, August unemployment data, market sell-off, which model am I using, and then grade yourself, right? So I would grade myself in terms of these four rules. Am I following the four rules? And I would grade myself A or B. If trade went against me, I would give myself a B. If trade went in my direction, I would give myself an A. And then I would also if I don't follow the trading plan, I would give myself C and D, right? If I'm hoping that the market will reverse, even though I'm down 2.5%, but I'm hoping it's going to close above 340. And all of a sudden it's at 335, then, I would grade myself C and D, right? And the goal is to always follow your trading plan and have A's and B's, because the most important is your the most important is concentrating on the process, right? This is I think, great blog that Dr. Maneker published, process versus outcome. If you can concentrate on the process and following your trading plan and just repetitive process, position management, size management, and you grade yourself A or B because you're following the process, I think that will help you become a more disciplined trader as opposed to only concentrating on outcomes. Meaning that, you know, if the trade went against you, then you think that, you know, you're doing something wrong. You know, it's much. So I think the best strategy is to concentrate on the process as opposed to outcome. All right, so that's, let me know if you guys have any questions. So how do you trade in current market conditions? So we have three different types of services. One is the live trading room and portfolio, right? If you want to trade alone, right, you're interested every time I trade, you know, what are the trades I'm doing, like let's say today. And then you can see, but you can use the elite service, right? So elite service allows you to look at the trades that I've done, like Disney trade or PPG trade or the spiders trade, and participate live in the morning bell and closing bell. These are the live webinars where I trade or Scott trades during morning bell or closing bell, but also have access to the trader log via either SMS message or just viewing, you know, what orders or I have in different stocks or ETFs. So you don't have to be in a live trading room all the time, right? So that's an elite service. So if you're an elite subscriber, you basically have access to the morning bell, closing bell, trader's log, and SMS message. If you don't have time, or you know, day trading is not something you're looking for, we do have two other live portfolio services. Premium portfolio is where I trade option spreads, right? So each week we have a new trade idea. So JP Morgan was the trade idea. Last Sunday, on Monday, I would execute an option spread, right? You can buy the stock at 102.77, or you can buy the spread. And you can see, you know, how the stock is doing right now, right? But this is more of a longer term trade. This is a longer term trade, and you can see, you know, what the model thinks about the stock. You know, in this example, 4 out of 4 predictions are higher for the next 20, 30, and 40, 50 days, and you can see the accuracy. So this is the service where you get one new trade idea a week, so about 4 trade ideas a month. I personally execute them in my account using option spreads. If you're more comfortable trading stock, then you would just buy stock or an option. So that's the premium service. I like the service because you have a video explaining, you know, you can have a full-time job. The signal gets generated on Sunday. You do get email and SMS message every time I would adjust this trade, enter or exit the position. But you also have time on Sunday to do your own research and decide whether you want to enter this trade or not, based on the instructional video and based on the probability of success, return on capital, etc. So this is the premium portfolio. So I'm trading option spreads, 4 trades a month. Also, we have a robo-investor portfolio. Some of our members are more comfortable trading stocks. So this is a portfolio where I trade similar fashion. You have 4 new trade ideas a month, but instead of trading option spreads, I trade stocks. Advantage of stocks is that I don't have to be correct on the timing, right? Options, you have to be correct on direction and timing. On the stocks, you know, if there is a correction right now, you know, and you know, I still think that Microsofts and Apples of the world are strong stocks, then I would just hold these positions for longer term. So newsletter gets published twice a month. You get 2 trade ideas every other week, so 4 trade ideas a month. Also, you get SMS message every time I get in or get out of the position or adjust. And that's the those are the live portfolios. So you have a premium, I trade option spreads, 4 trade ideas a month. Robo investor, I trade stock, 4 trades a month. And then elite circle is combination of weekly trader, active trader, and monthly trader. And every day I trade, right? I either day trade or I have longer term trades, but there is an example of trades every single day, right? So this is more of an active trader. So again, making sure that if you are elite subscriber, you don't overtrade, right? Go back to your first 2 rules of the trading. 30% portfolio should be in cash, and then, portfolio drawdown. If you maximum loss is 2.5%, you have to decide how many positions can you have. Is it 4 positions if you just start trading and you're still learning the system, or is it 8 to 10 positions because you've been trading for a while and you're more comfortable with trading. But you don't want to overtrade your account, especially on the days like this where market just kind of continues to sell off. If you're over leveraged in technology or you're over leveraged in the market, then all right. So those are the 3 different services that we have for live trading room and portfolio. Then we also, if you're interested in models, the outcome of the models, then again, we have active trader is optimized for 1 or 2 days. You can see it here, optimized for 1 or 2 days. Holding time is usually 1 or 2 days, so this is meant for short-term day trading. Weekly trader is optimized for 2 to 5 days. Usually I hold a position, couple days. And then there is a monthly trader model. So you can have subscription to all 3 or just one or the other. And monthly trader holding time is usually 5 to 20 days, right? So you can see, let's say monthly trader, Disney, right? That Disney was one of the trade ideas for monthly trader. And again, you have different choices. You can enter at 134.90, or you can wait for the predicted low or for the, Friday's close. And this position's meant to, holding time usually holding time 5 to 20 days, and model makes prediction for the next 2 months. For active trader, model makes prediction for 1 day, right? Today BLL, right? So it says buy BLL, and then again, you look at the pre-market futures. If they're down, then you wait for the predicted low. Market is continuing in correction, so if it does reach 81% stop loss, 82.38, then you would be out of this trade. And you can also trade options for weekly trader, monthly trader, and day trader. You can also trade options. Instead of buying the stock for $77, 100 shares would be $7,700. You can buy 1 call, in the money call, for $5.70. So I'll give you those choices. Any questions? Can you guys hear me? Let me know if you guys can still hear me. Sounds good, great. Perfect field, Joseph, thank you. Carmen, no, I mean, you keep 30% of your portfolio in cash, to actually able to allocate them or repair your position. So you do use this money to repair your trades or allocate them. Right now I would wait for the market to find some kind of a support, right? I thought 340 will hold short term. Doesn't look like 340 will hold. I would look into next week. Short term market is oversold, right? It's this is a similar price action where we were in February. So definitely, large volume, because back to everybody's coming back from vacation. So I would wait for some kind of a support, right? 340 did not hold. Next level of support is 328, right? And I would watch QQQ because QQQ is what's pushing the market to the downside. We already basically touched 50-day moving average, right? While we were speaking in the past, few minutes, we actually went as low as 271, which is a 50-day moving average. And in these kind of trading, 75% of the time, market will hold this level. All right, so 270 is a good support, right? It goes back to all the way through July 20th, so basically 2 months. And I would watch if this level will hold. If next week or in the next 2 weeks, if you see that the 50-day moving average holds, but sometimes it does overshoot, right? We've seen 50-day moving average where it overshots. Then as it curls back up and start going back up, that's where I would take that 30% of the cash and start deploying, maybe take 10% of that cash to repair your position or deploy it back into the stock market. Because I think this is, there's nothing fundamentally wrong with the technology sector. This is kind of the pillar of the stock market. I think it will underperform the value stocks, but there's nothing wrong with the Microsoft earnings or Apple earnings. These are strong stocks. They're just way overbought, right? From technical perspective, usually you don't, market doubled in size, right? We went from 171 to 300, which is not that's not a normal price action. It needs some kind of a short-term breather. And I think that's what, I thought it's going to happen in August. It happened first week in September. That's fine. But that's, so that's how we would use that cash. Don, if you want to see which sectors, so the question is which sectors are the strongest? And if you guys have a microphone and you want to ask questions live, I do prefer that. So sometimes, if you do have a mic and you don't mind, then just let me know. Vlad, just say Vlad, I want to ask questions live. So company screener is the best tool that we have in terms of sectors, which sectors are the strongest, right? So the model runs once, this is a monthly prediction, so it runs on September 1st. So it just ran. And right now, going into the October, it basically sees that banking stocks have the strongest momentum, right? You look at these momentums, and you can see semiconductors is 66%, bank stocks are 50% momentum, consumer durables 45%. What else is very strong? Metals and miners, right? Metals and miners is a strong momentum. Specialty retail is a strong momentum, 105%. And then work from home stocks, right? But keep in mind, this is as effective as September 1st. So you can see work from home stocks are the strongest going into September, but now you can definitely see the rotation. It's probably the weakest, right? Work from home stocks, just lost, 15% of its value. So that's where you can find the sectors that are the strongest. Brent, what is my take? Short term, on I kind of have a top to bottom approach. So short term work from home stocks are definitely under pressure, and I would not try to catch a falling knife, right? And Netflix is not a it is kind of work from home stocks, but it's more of an established company. This is more of a technical trading. Short term, I think it's under pressure. I would wait for some kind of a support, kind of build in this bottom process. But I would wait for the build of the bottom process. Usually, we've seen with Netflix, 50-day moving average has been a great opportunity to get in, right? Would I get in like today? I would probably wait at least next week and see if there's no more momentum to the downside. But again, I think for Netflix, you can see outside of the COVID-19 correction, 50-day moving average has been a good entry point. And it already pierced through that, right? So shortly pierced through this, definitely oversold. I think Netflix short term, if we're talking about a couple of days, is due for pullback, especially off of, for bounce back, right? For bounce back. So if you're a day trader, if you want to have a clearly defined stop loss, then you can enter it because it is oversold. Long term, potentially, strong support is 465, 460, right? This was after the earnings. It touched this twice. So potentially, 466 for longer term trader would be a better entry point for Netflix. But I would watch these levels, right? QQQ already at 50-day moving average, Netflix already at 50-day moving average. This is a strong support. I think at least, for the next couple of weeks, this level will hold. And same thing with XLK. All of these average are now testing 50-day moving average. So if you use dollar cost average, this is where I would start. If you're a long-term investor, right? If you're not talking about a couple of days or a couple of weeks, if you're a long-term trader or investor and your time horizon is a couple months, this is where I would start using dollar cost average and start, slowly accumulate. TJ, for day trading, usually I don't want to risk more than 1% of my portfolio for day trading. So for day traders, usually you're a lot more. At the end of the day, you're completely in cash, right? Day trading, I mean, you can trade and use all of your money to day trade, but you just need to make sure that, on any given trade, you don't trade, you don't lose more than 1%. That's usually, usually you don't want to lose more than, and not have more than 1 or 2 positions at any given time. George, Tesla for the next 2 weeks, I think the market will bounce back by end of September, right? Next 2 weeks, usually it's a very volatile, if you follow my webinars or my blogs or video blogs, I've been referring to this chart probably for the past couple months, right? The timing is hard to say, but usually, end of August, right, there is a correction, right? So in June, end of June, we had a short-term correction, and then usually end of August, the correction. We didn't have it in the end of August. It kind of happened in the beginning of September. But usually from seasonality point of view, I think the same pattern will repeat, right? Market will bounce back, market will sell off again toward the end of September, but I think it will start going higher either end of September or end of October, right? Going into elections, right? I think, I personally think we will revisit the highs. For Tesla right now, it's kind of a falling knife. Same thing as technology, it is approaching this key support level, right? 359, this is a key support level. If you want to do short-term trading, buy at 360 or 370, have a well-defined stop level, then you can do it. Because if a 360 level doesn't hold, then the next level is 280. And that's 80 points from 380. This is, a significant pullback. So short term, it's a kind of a falling knife. Usually don't try to catch a falling knife. You want it to wait to build some kind of a support level. If it's 2 weeks, 2 weeks trading. Carmen, thank you. Yeah, I would look at all these supports. I personally think support is going to come from the value stocks, right? This is the only hope for spiders right now. So materials are one of the strongest sector. That's 50-day moving average. So far it's still home builders right at the 50-day moving average. I would keep an eye on home builders, metals and miners. June 8th is the main support level. So I would look at the value sector and see if these main levels will hold. Because if the value stocks do not hold and these main support levels will be broken, then I think the correction will continue on, right? But if the value stocks are able to hold on to these key breakout levels, then I think this is just short-term correction in the technology space, which everybody talked about for the past 3 months or maybe 4 months. I mean, people were talking about correction in technology, I think since May, right? At least since May, but it was we never had more than 2 days, three days in a row of down days. This is definitely, the biggest sell-off since, since the COVID-19. All right. Any other questions? PRGO. I personally don't trade PRGO, but I can give you my top to bottom approach. Pharmaceutical companies, it had earnings, definitely in downtrend. So PRGO, personally, I don't trade this, but just based on the price action, it's lower highs, lower lows, approaching key support level. I would watch this 50 level. If it breaks through the 50 level, if you're long, I would probably exit that position. But in general, IBB, I think, are oversold, and XBI are oversold. And I think this is a buying opportunity. I mean, it doesn't have to be today. Wait for it to find some kind of a support level and start bouncing back. But I think this is extremely oversold. All right, guys, that's let me know if you guys have any other questions. Otherwise, this is all I was planning to cover. Spiders are continued its march to the downside. We'll see what the closing is, and I think, right, more important is technology. This is kind of the line in the sand, because if the 50-day moving average does not hold, right, the next level of support would be 250. Right, so that would be a 10% drop. So potentially, if the I would keep an eye next week. If we have 2-3 down days below 50-day moving average, then the next level of support would be 250, and that I think is going to continue putting pressure on spiders. Spiders is kind of the same thing, 50-day moving average. I mean, we're very practically close to that level. If next week we drop below 50-day moving average, then key support would be here, 320, which I don't think we're going to break 320. I don't even think we're going to break 329, but we'll see. All right, Brent, thank you. Marvin, thank you. Phil, thank you. TJ, I think QQQ was leading the market to the upside. I think right now we're going to be in a long-term rotation away from the growth stocks. I think the VTV will continue to outperform the QQQ, going into elections and probably into the next year. Right, this QQQ need to do a catch-up. I mean, VTV needs to do a catch-up and reach the, pre-June high, which is pretty far. And I think QQQ, I think the stop is set here probably for a very long time. Definitely, I don't think QQQ will break through the 300 level prior to elections. All right. All right, have a great weekend. Akitunda, Andre, Barbie, Brand, Carmen, Claudia, Derek, Don, Elliot, Eng, Eric, Faust, George, Hand, Joseph, Julia, Koshik, Kermal, Kevin, Marvin, Mon, Ned, Peter, Phil, Ralph, Richard, Ranj, Sean, Steve, TJ, Trader, Vitus. Thank you very much and have a great day. And enjoy long weekend. Enjoy your Labor Day weekend and spend some time with friends and family. Make sure you invest into your emotional capital. Read some of the videos and blogs on Yellow Tunnel. Yellow Tunnel was built for the times like this, right? Because when VIX is 20, 15, people tend to dismiss trading psychology. When VIX is at 40, at 50, I think this is a good time to invest into learning about yourself. Right? So I think there's a lot of good content on Yellow Tunnel, which I hope you guys can take advantage of. All right, thank you very much and have a great day.